All right, everybody, welcome back to Cashflow Chronicles. We have Chris Patel in the car. We didn't want to leave you guys without an episode this Tuesday evening, July 23rd, believe it or not, 2024. Just a light reminder for everyone, if you have not already, subscribe so you can participate in the chat. It's absolutely free. Some pullbacks in the market over the past week or so since we talked to you guys last. Apple at 225, Amazon pulling back from 200 at 186. Dutch Bros pulling back from the mid 40s. It's at 38.90. Google just had earnings today. We might touch on that. $178. Palantir hanging out just below $29, blowing Chris's shorts up. The S&P 500 pulling back to 55. I think the Q's pulling back about 5% from its all-time highs as well. Bitcoin, since the last time we checked in, up back into the close mid 60s. Last time we checked in, it was hanging on the mid 50s. It was at Mount Gox that was selling everything. Germany was selling everything. Oil has pulled back about 5% as well into the mid to high 70s, 77.21 if I'm looking at WTI. Brent is trading at $81. And natural gas, 21.43. Mr. Patel, how are you doing, my friend?
I am actually pretty good. Driving from Savannah to Atlanta tonight. I had a cousin come visit from the UK, and so I dropped her off in Savannah. And I've got like a nice 3.5 hour drive back. So
There you go.
yay.
Good cousin, man. I miss my cousins. I don't hang out with them nearly as much as I moved to Texas, so it's nice of you to check in with them.
Yeah, I'm on I-16 right now, and some of these truck drivers, dude, they are just hauling ass right now. I'm doing about 80 right now, and they're keeping up with me. I mean, technically it's like at 70, so like you got that 10%. I mean, that 10 mile, like a little bit ahead, it should be fine.
Yeah.
I should slow down a little bit, but they're literally like riding my ass right now. So
dude, they got their places to go. They got their 7 a.m. drop-offs tomorrow morning, and you're getting in the way.
Yeah, it's kind of funny. I sometimes like wonder what kind of life like truck drivers like live. I know a couple of our subscribers are truck drivers and stuff, and they actually do pretty well for themselves. If you're willing to like commit yourself to the industry and like really work your tail off, you can actually do pretty well.
Yeah. No, it's actually surprising that you say that. I don't know why I've had so many. Maybe I'm destined to actually get into the business because the amount of times I've talked about truckers and just the industry. I'm no expert by any means, so don't hang me on a cross or anything like that for what I say. But I just on TikTok I keep seeing stuff about truckers show up. One of my coworkers, her husband is starting a trucking business. It's like if for some reason it's just showing up in my life, and I've been thinking about it as well. So it's like it's just weird that the topic comes up again for like the 5th or 6th time within the last week and a half. But that's good. Well, hopefully you have a good safe drive home. I know sometimes it can get a little hectic out there.
This is like the one time I kind of wish I had a Tesla, because I could just technically, I mean, based on what people tell me, I could just put it on autopilot, and I mean, I'd still have to like keep my focus on the road here and there, but for the most part, the autopilot would do most of the navigating for me. I mean, I'm not sure that I could probably live with that anxiety, maybe until like, well, at least like 6 months, and then after that, it shouldn't be too bad, but
you get a little used to it. But no, I did. Speaking of auto drive, I was listening to the Tesla earnings call, and I won't dive too much into it. But basically, Elon straight up just said verbatim, if you're not believing that auto drive or autonomous driving is what's going to be the savior of Tesla, then don't have our stock, don't invest in it. And he basically said that point blank on the call. And I'll say, man, I do like listening. I feel like people are probably going to give Elon a lot of crap, but he said a lot of really intelligent things about the grid, and he said a lot of intelligent things about how energy works in this world. And I really hope that people don't really like burn him to the ground based off of what he said, because a lot of what he said in his call was very, very realistic. He's talking about how you need to have 2 to 3 times the amount of electric capacity as you do now, because obviously solar and wind, they're a little bit more intermittent than It's like oil, natural gas, nuclear, etc. And so I feel like, maybe he's lighting fires under people's butts, but he was honest in a lot of those things. And so I'm curious if people actually listen to him or if they're going to think he's a Debbie Downer on the call. But anyway, maybe it's a different story for
the one thing no one can deny about Elon is that the guy is a visionary, right?
Yeah.
So the thing is, like, if you want to invest in someone who's willing to dream big and then also kind of like fight for that dream, there's no better CEO than Elon Musk, right?
Yeah.
Now, I have been
I'm at a bad spot. Are you back?
in the past fault a little bit for being. So there me?
Are you back? You
Hello?
cut out for a couple seconds. You might have hit a bad spot.
Yeah. I said with Elon, a lot of people will fault me saying, oh, Chris, like you missed out on the Tesla boat and stuff. And I get that. It's just, I can't borrow someone else's conviction, right? And the thing with me is that sometimes the valuation gets too crazy, in which case now it's hard for me to justify holding that position over something I believe in more. Like, dude, I believe in points, but if Tesla definitely dips like what it was dipping
Yeah,
earlier this year.
we're getting about every fifth word that you're saying there, Mr. Patel. So maybe you're just going through
I think I'm a net
bad zone.
buyer this time, and especially if it falls in line with like the valuations that really give me a lot of comfort, dude, I'll be the first one to buy it again. I do have to say, Tesla.
Mr. Patel, once again, we're losing you. We hear about every fifth word that you might be saying. So, unfortunately, if you hear me talking and cutting you off, it's because we're not hearing anything that you're saying. But from what I think I'm hearing you say, you don't mind. You didn't have the conviction. It was overpriced, but now you're starting to see it a little bit more. It's come down in price, and maybe you'll have an opportunity to go forward. But it was interesting because I was looking at it myself, and I was looking at the operating margins from GM, and I was looking at the operating margins from Tesla. Lo and behold, they're the same. And so I actually wanted to look at what kind of net income and free cash flow GM was making in the same for Tesla, and actually compare the two and see on a valuation basis. And then people are like, oh, but the net debt's different. Yeah, the net debt's different, but you know what I'm saying? Like, it's, you are comparing apples to oranges in some sense, but everyone was talking about how they're going to be selling 8 million cars at a 30% gross margin, and that's not the case anymore, right? It's at 6% margins. If you're lucky, those are operating margins. So anyway, I thought it was interesting that the thesis has definitely changed on Tesla, but yet people are still, to an extent, holding it as if nothing's changed. And so my hope is for the people that are still holding it, you get what you need from an investment perspective, to be able to have your theory make a little bit of sense. Mr. Patel rejoined here. How is it everything going, Mr. Patel? Yeah, we're not.
Hey, Matt, sorry. I
You're
just have
good.
really terrible signal. I'm in like the boonies right now, so yeah.
It's all good, my friend. Yeah, all good.
This was a fail.
Yeah, well, it is what it is. Yeah, I think we can try it again, and if it cuts out, then we can always postpone to a later date. It's not a big deal. I don't know if you're talking or not. Are you talking?
Yeah, I don't think.
Oh man. Well, I don't want to go into the performance and stuff because a lot of the stuff.
This is a guy.
Yeah, I was gonna say I don't want to go to performance and stuff because a lot of it is your performance, and I don't want to steal that away from you, and I don't want to steal.
No. Go ahead. Go ahead. Let's just go over it quickly. We'll do a better stream sometime like later next week. Well, later this week. I'm sorry, guys. It's my bad. I should have been a bit better about like figuring out when to drive home. Yeah.
It's all good, man. Not a problem. Let's see. Is that working? All right. So here's the performance as it is now. We're at 28.65 in the portfolio. We're up about $40 today. The one that we did have, actually, I made a mistake. I wanted to share, so we stopped sharing the one position that we closed out overall, which was Toreon, and I wanted to get that on screen. So let me take a screenshot of that so that way we all have an idea as to how we made off of that quick trade, just based off of after the rumors of Saudi potentially getting involved, and then eventually the buyout that occurred with Driftwood. With Woodside for it. Let me share back again my screen. So let me go back to the overall. So the overall 28.65. This is currently showing up as just alphabetical. So there's no size or up percentages weighting this at the moment. But the big ones today was Resurgence and Hims. And the cruise lines did well as well. So Chris, good shout out to you with respect to that. And those are doing handsomely. We're up in the low to mid 20s since we bought into those. TQQQ's had a bit of a pullback. It was up in like the 120, 130% range, but so it's down from like the 80s. It was like in mid 80s at one point. So unfortunately, we've had a little bit of a pullback there. But otherwise, everything else in the portfolio is doing rather handsomely, except for Accelera. Verizon's had a little bit of a pullback as well. But NEXT up about 11%. But going on, and then I'm kind of curious to hear what Mr. Patel has to say, and we might have to wait for another discussion later on if he's not able to fully convey exactly what he wants. But we had taken an opportunity. What was it? I guess it was early June. There were some rumblings about Saudi Aramco potentially moving in on Toreon. And Toreon, for those of you guys who don't necessarily know much, they're talking about a Driftwood LNG project that is permitted. It's about 27.5 MTPA, which is a crap ton of LNG. For any of you guys that follow along, it's comparable to Sabine Pass that Cheniere Energy has. And so if you're talking about that sort of scale, you're talking about monstrous amounts of potential cash flow, but it's also costing a lot of money and construction time. It's not something you turn around in a dime. So you need to have big pockets to be able to get there. But once you get there, you have literally decades potentially of billions of dollars a year of cash flow. Unfortunately, Toreon, the company that was actually started by the previous CEO of Cheniere, who was actually kicked out as well from Cheniere, obviously had been going through some difficulties or doing some rearrangements, blah, 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 blah. You've seen a lot of, and I can't get too in depth with this, but you've seen a lot of Middle Eastern players, more so countries, getting involved in global LNG expansion, so investing more so outside of their maritime boundaries. And so when you hear Saudi Aramco potentially getting involved in NEXT and getting involved in Toreon, it kind of perks up your ears a little bit. And obviously over the past month or so, we've seen ADNOC buy into NEXT. We've seen hopefully Saudi Aramco potentially getting involved, but unfortunately they did not. But Toreon was eventually bought out by Woodside, who is a huge natural gas LNG player in Australia. They've also bought a lot recently, some of the BHP assets. Apologies, my voice. I have a little bit of a head cold as well. So sorry if I'm a little scratchy. But Woodside bought out a year or so ago a lot of the BHP assets, or all the BHP petroleum assets that were remaining. And BHP went back to just being strictly a metals miner. So That's that. But what did we do with Toreon? So we had a couple $100 sitting around. I forget with what, but we basically took the opportunity to buy, I think it was up to like 300 or so shares. Maybe it was closer to 500 shares or so of Toreon. And when it popped up to like the mid 80s, we sold some of it. So we made a little bit of like a $60 profit there. And we're talking small scale, right? So, we keep in mind, we're only playing with about $2,800. And overall, we were talking about maybe $300 a total of total invested capital. But overall, we walked away with, quite a little bit more, maybe a couple $100 more than what we put into it. So a lot of this was a 60-cent cost basis, and we sold, anywhere between 85 to 95 cents. So a pretty good win for a little bit of over a month or so. And some of it was within 4 to 5 days of playing that bet. And a lot of people were buying it in the 50s, even potentially the high 40s. So in that respect, congrats to those people that got involved in the Toreon trade. There was also another trade that Chris was talking about, which was TEL-Z, which was a baby bond. And I'm going to give Chris the opportunity to explain that one if he can. We'll see.
This is so weird. I'm on I-16, and there was like some kind of road construction / there's just cones everywhere. So like so natural gas obviously is the future, right? So we kind of want to be in the midstream part of the natural gas play, and there are quite a few natural gas liquefaction companies going online. A lot of them are in the private side. So as investors, we don't really get an opportunity. One of them that was very interesting was Toreon, of course, but Toreon was just mismanaged by Suki, who really just, you really had to dig deep into like Toreon's operating like way that they wanted to conduct business, and it just didn't make sense. So, all right, I gotta go. I don't know what's going on with this, but I gotta go. There's like some kind of weird construction thing. So,
all right, good luck. Good luck. No worries.
bye.
Yeah. So, so there's that. Not a problem with that. So yeah, Chris also recommended TEL-Z, which was kind of a baby bond. So that's kind of like it's almost like a preferred equity as well. And so with that, you're able to potentially buy.
Sorry, guys.
You're able to potentially buy a note that was basically issued at 25 bucks and basically pays out a dividend of like 6 or 8%. And with that, you're able to kind of hold on to it. And a lot of people were able to pick it up at like $13, $12. And so their yield on that would still remain the same because it's a preferred bond. And people were basically getting 12, 13% payouts for that. And now recently, I was just double checking that Mr. Patel didn't rejoin. I think he's gone for good. But let me pull up TEL-Z, because when I checked the day of the announcement for Toreon, it had jumped all the way up to 20 some dollars. And so this was the big boy play that Mr. Patel and I sold out of too early, and we did not realize this. So if I remember correctly, Mr. Patel and I were buying back here after it had kind of dropped. We bought too early. We didn't get into the $8-9 range. We were buying, I think, when it dropped initially, like here, in like the $12-13 range. And we never loaded up more, and when it was down here, but we wish we did. There was some news that had come out about, mismanagement. Are they going to go bankrupt, etc.? But obviously, you've seen now. Here we are. It's back up to close to $24, and so you were able to capture that dividend. It was an 8.25 senior note. So even if you buy it today, which I don't know if it's advisable, but you'd basically get an 8.25% dividend yield on it. But imagine if you bought it at $12, you're getting a 16% dividend yield. And that's why people were potentially buying into it, right? It was a little bit risky, right? Who knows if Toreon was going to get bought out? You still don't necessarily know if it's going to go through or not. It still has to go through regulation. But in the meantime, you doubled your money and you're able to kind of get out. And so Chris and I were talking a little bit about that one, and more so Chris, he'd kind of introduced me to that one. But that's sometimes the benefits of doing preferred equities, right? Especially if you're looking more for an income opportunity. And also, you have a little bit of an income stream, but also you have that protection against the equities themselves from a preferred, because basically with stock, you're lowest on the totem pole at that point. You get paid out to the bondholders first, and then you get the preferred equity holders, and then it goes to the normal equity holders if there's anything left. So lastly, year to date, which was pretty nice because we have had a pullback comparatively. The S&P 500 up about 17.5% versus Chris and I's portfolio year to date is up 45%. The last time we checked in with you guys, we were at about 40%. That was on July 10th. And here we are a week or so later, and we're up 45%. A lot of that probably due to HIMS. What else is there? Toreon, obviously, a little bit because we sold out of that. NEXT's pumped a little bit. Rocket Lab's pumped a little bit. So anyway, there's really that. I'm not going to cut you guys short, but what I will do is dedicate the rest of the opportunity for people to ask any questions. I was going to do one of these on my own on the weekend. I like to try to keep in touch with folks on my channel and make sure, because I normally, if I'm doing streaming, I'm normally just doing it on Cashflow Chronicles, but would love to talk to you guys and hear any questions you guys might have. I know Chris and I have different opinions on a lot of different things, and so we can chit chat about it. So this one, good call on Tell Z. Any thoughts moving on to NEXT? Yeah, it's with a lot of these things, man. It goes back to what's your time horizon and how much risk, I have no doubt that NEXT, or at least the Rio Grande LNG project, will get built. I think there's too much momentum and contracts behind it at this point, and construction's ongoing, right? So I'm really curious to see when they have the second Q earnings call, the progress that they've made. And at this point, they're almost getting ready to sanction the fourth train, right? And that fourth train is hugely valuable for NEXT just based off the fact that it has more equity compared to the first three trains for NEXT. So that's what I'm looking forward to. I think there's going to be a good catalyst associated with the stock with that. But you're talking about something that's not actually going to generate any revenue until 2027, 2028. So you're literally just going to be sitting there on your hands being like, when's first gas, right? So you kind of have to be like, are you okay with it? And I guess you just have to look at what you think the potential cash flow streams will look like. You also have to think, will these guys have to dilute shareholdership to be able to get the equity that they need, or the capital they need to be able to continue to invest and maintain the equity that they have? So for now, the train 4, they have a really good equity position, but they're not going to sell down more. I don't know. And if that's the case, then is the future cash flow that they've kind of noted of 1 to 1.3 billion with the first 5 trains or so on an annual basis, is that actually going to be what comes to fruition? And that's kind of where I'm sitting. Like, I don't know, right? I don't have the answer for you. But I guess my question is, they just got some recent financing in place. That looks really promising. They don't have to start paying until I think like 2028 or 2029 on some of the interest payments. So once it actually starts up, which is pretty dope. So they've got enough at this point where I feel like they'll be able to kind of get the ball rolling to an extent where they'll definitely get trains 1, 2, and 3 up. Will they have the capital pockets, the capital frame to be able to get the 4th and 5th train up? That's a good question. Or will they have to delay that? Easily, I think if you have the time to delay, they'll definitely get them up. It's just, will they get it up with the equity? And that's really what matters, right? Because you're investing in NEXT, you're not investing in the asset, right? And NEXT owns a portion of the asset. So it'd be like me saying, yes, you're investing in Matty Capital, but I no longer own 100% of my house. I own 50%, but you're still buying shares of Matty Capital, expecting me to own 100% of the house. So you have to recognize all those things, and you kind of have to say, well, once they do get distributable cash flow, what are they going to do with it? Are they actually going to distribute it as a limited partnership? Are they doing it as a C corp? Are they, going to distribute it all the share or all the dividends as shares, or all the distributable cash flow as shares? They're going to buy back stock. Are they going to pay down debt? What's the true mode of what they're doing? And I'm not 100% certain if it's set up at the moment as an MLP. And so that's something I need to really investigate, because things will operate very differently. It'll also be valued very differently if it's valued as a C corp versus an MLP. There's also tax implications associated with it as well. So that's all sorts of things you need to kind of keep in mind if you're investing in NEXT. And if you're looking for a payout within the next a year, there's probably other things out there for you. I would look at this as, like a lot of the things that I invest in, a 5 to 10 year play. And, if you don't have that ability to sit and handle the volatility, then I would say it's not a play for you. Just like I would say something very similar for Rocket Lab as well. Let's see. Sorry, yeah, if I'm breathing a little abnormal, I got the head cold, and so I'm conscious that I'm like mouth breathing into this damn thing. I feel bad. Hopefully I'm not destroying your guys' ears. Yeah, man, Hot Chris, we try to schedule around him. He's a very busy guy, and so he was in New York. And so I try to accommodate him and not bother him, because I know he's doing some stuff in New York, but he's too cool. Doesn't want to do Cashflow Chronicles. He was cool enough to go hang out with Amit, get some steak dinners. Thanks for the fucking invite. No, I'm just kidding. So anyway, glad that they were able to meet up. Chris is a good guy. So any feelings on Enbridge? Notice a 7% dividend. I guess it all just really depends on what you're looking for, right? It's an MLP, if I remember correctly. So you're going to pay a little bit more on the dividend. So it's going to be taxed as regular income. That may or may not matter to you, depending on what tax bracket you're in. Me, it matters a lot, because I'm getting up there in the tax bracket. So at 7% yield, unless it's in a Roth or something like that, it's going to get taxed pretty heavy. So just keep that in mind. But yeah, the guy to talk about with MLPs is Steven, and I'm sure he's got a really good article. We've had him on in the past talking about Cashflow Chronicles, talking about energy transfer, Enbridge, etc. That's all in season 1. I'm sure you can find that with ease and talk about it. I'm actually selling puts on Celsius here. Selling puts, not buying, and I've sold $50 puts, and so I'm really hoping that the earnings call gives it its last little umph to the downside. If it does, I'm very bullish on Celsius here. I think. But then again, right? So think about it, Chris, and I do things very differently. I don't mind short-term pain, right? I don't mind being down 10, 20%. I just want to know that I got in, right? I'm I'm one of those guys that doesn't mind being in the hurt, but we're down in the last 2 months. This is a 3-month chart here. In the last 2 months, we're down from $96 to over 50% loss. Right? Let's just take this. This is from $60. But yeah, if you take 96% or $96, we're at 47. Let me do some math. 47 divided by 96. That's a 52% loss in the last 2.5 months. To me, before you had this run up earlier in the year, in January timeframe, you were trading at that $50-$60 range and kind of hanging out. And this is when all the insiders, the owner had died, unfortunately, in August timeframe, and he was giving a lot of his money to the heirs, and they were selling off a lot of the shares throughout time. So that's why this kind of like consolidation period happened in the late last half of last year. And once that kind of was over with for a short amount of time, it really went on a pretty good run. Now, am I expecting a massive run like we've seen here? No. What I'm doing personally is selling puts, and I'm gauging whether or not that means I end up taking a position. Generally, when I'm selling puts, it means I don't have enough money on hand right now to go out and buy a lot of these shares outright. And so for me, that means I'm dipping my toe in, right? I'm getting a little bit of income while I wait. Is it the right position? Because worst case scenario, I could sell off. It's not a big deal, and I could take the couple $1,000 loss, and it is what it is. Versus, and to me, I like to take that hedge as well, because I think I sold my 50 puts for like $2 or $3, right? So basically, right now, where it's sitting is it's sitting at about break even at 47.50, if I remember correctly. Let me just make sure I don't want to share my screen, but let me just double check I'm not lying to you guys. Why is it showing that? Oh, closed positions open. So my Celsius, I have 3 Celsius. It's not a lot. I sold them for $250. Okay, I thought I sold them for $3. So basically, right now they're break even, right? So, based off my cost basis, the actual puts themselves have increased to about $5. So technically, I'm underwater if I wanted to buy them back today. But I think they're for September. No, they're for August. So literally, August puts for $50. You could sell them for $5. Sorry, 10% return on that, but you are at 47.50. So I'm sure if I wait, it's still going to be in the mid 40s to high 40s. So I have a comfortable feeling that I'm just going to be sitting here for a while. And until I see the numbers from 2Q, I probably won't make a decision. And if the numbers are kind of flat, but it's going to like stay in this mid to like low $50 range, which I have a feeling that's where it's going to kind of stabilize for a little bit, then the numbers are going to catch up, right? And then I have another quarter or so to make an actual decision. And by the time 3Q comes around, I'm either buying shares or getting out and just taking a little bit of that premium with me. So, thoughts on Google earnings, man? Some people messaged me in the Chris's Patreon Discord, and they were like, Amit was saying it wasn't exciting. Well, Amit doesn't look at numbers, I guess, because it wasn't really volatile. So from like a stock movement perspective, it wasn't that crazy. I mean, it moved a little bit, but it wasn't like a 15% move or anything like that. But you did end up having a little bit of sell off after hours, almost down 1.5%, 2%. But to me, the bright shining star continues to be that cloud business. And I think a lot of people don't give it credit. I think you want to pull some numbers out of the air. I will. Last year, this time, it was like $350 million in net income, right? So rolling a $1.5 billion net income business. A year later, we're looking at $1 billion in net income. So you've almost tripled the amount of money you're making in that business. And you're making, I forget what the annual run rate from a revenue perspective was, but you think about it, that's a $4 billion business and growing expansively. So my prediction, I wrote an article in, I don't remember if it was February, March, or April, but basically stating that Google on its own is going to be a $400 to $700 billion company. Google Cloud, sorry, it's going to be a $400 to $700 billion company, and it's on the way. And you're probably sitting there like, what the fuck is this guy smoking? Well, if you think about a $400 billion company, in order to really be worth that, especially if you're growing at a high margin, you really need to 20x your income. So you really only need 20 billion in terms of net income. Well, I think within the next 2 to 3 years, the Google Cloud net income will probably be close to 15 to 20 billion. So if you think about that, 15 to 20 billion, multiply that by 20 or 30, there you go. You have a $400 billion business. And so plus the margins that it has. So I think it's continued to do well. I still laugh when people say Google search. I thought it was going to 0. Obviously, it's not. It was up again, massively double digits, and continuing to do extremely well. Crazy to see the dividends, as much as small it is, 20 cents per share. Guess how much that costs when you roll it up at the group level? $2.5 billion. How crazy is that? when people start thinking the same thing with Apple, right? People are like, oh, it only pays a 1% dividend. You're talking about a $3 trillion company. So 1% dividend is $30 billion. So it's the same sort of thing here. You're talking about, oh, less than a 1%. People are like, oh, it's only less than 1%. Like, it's kind of measly. It's like, well, it's also a $2 trillion company. So 1% is going to be $20 billion. So that little small dividend that they pay, $2.5 billion. Cool also to see. They purchased, I forget what it was, like some absurd amount of buybacks in the first half of the last year, up from last year. But just in the first half of the year, it was like something I'm going to mess up the number, but it was something like 30 or $40 billion worth of buybacks, which just goes to show you, the amount of buybacks are doing is really helping from an EPS growth perspective. So to me, companies continue to do well. I think the reason why we're seeing a slight pullback, hey, the company's up pretty handsomely since the first quarter. If you guys remember, first quarter, when we had all these Gemini problems and it was giving out the wrong color person for what people were asking and it was historically incorrect. You remember the stock pulled back to $120. We're up, what is that? I'm not good with math. You guys know that, but what's 50 divided by 120? 40% from there, believe it or not. And that's with this pullback. So from 170, it was hitting 190, just a couple weeks ago, if you guys remember. So my price target, I think, for the end of the year was 185, 195 or 200 or something for next year. I have to go back and read my article and I need to update it. But man, did that article age really well. I'm pretty proud of myself by being able to actually think things through and really think about these things logistically and not actually get bogged down by, search is going to zero. It's like, what evidence do you have, my guy? Because last time I checked, it's still going gangbusters. And, what's any difference between Gemini being included as search versus Google.com? Like these people, they're just saying things for saying things to be because they're in front of a camera and it doesn't make sense, But anyway, good story there. I'm really excited to see where Google will be. I mean, similar story with Airbnb, right? I mean, they're just going to be able to buy back a crap ton of stock. So it makes you think, is that the play? Even if the growth slows down, they're making so much money. So thoughts on Nextera? Nextera's had a little bit of a run. It has pulled back, right, since the first quarter, but I think they're supposed to pull out with 98 cents, 99 cents a share, and they're generally pretty consistent on growing that. So I'm excited for that. $3.96. They're hanging out at about $75. Yeah, I don't know. I think unfortunately, with what environment we're in right now, and I'm seeing this, forget that I work for an oil company for a second, decouple that because I don't want, to bring any of that. I don't want the company that I work for to be reflected in my current statements. I just think that with what happened in the early parts of the pandemic, everyone was very much rushing towards ESG because it was the flavor of the month. And I'm not saying that's a bad thing, right? I'm just saying that I think the pendulum sometimes swings a lot. And unfortunately, it just swung way too hard, way too quickly. And, maybe that's sometimes necessary, right? Because when the pendulum swings back a little bit, which I think is what's kind of happened probably for renewable companies 6 months to a year ago, the pendulum swing all the way back. Now I think we're getting to the place where things are just about right. Things are starting to make a little bit of sense. The companies that were really struggling are on the verge of calling it quits. But we're just getting to the place where the companies that have the pockets that are actually well executed and well run are starting to see the benefits again. That's your NextEra Energies. These guys have been around for decades. They know what they're doing. But to be valued at an 18.5 to 19x earnings, this is a premium business here, right? A premium business that is going to continue to excel. It's one of those businesses that I think should be trading between 22 and 25x earnings, just because I know it's growing. I know it's a high quality business. I know it's one of a kind. It's one of the biggest utilities in the country. Comparatively to what we have here in Texas, it does extremely well in terms of not losing their people power. Might be biased on that statement, but no, coming from somebody that works in energy, people look at Nextera and they say, these guys know what they're doing. So I think it's a good long-term hold. You want a little dividend, and you want something that's, kind of like a bond in that respect and will grow over time. Bond's probably not a right word because you'd expect the principal to kind of stay flat and you just get your dividend. But you want something that's going to be slow and steady and wins the race. Nextera Energy, don't rush to buy it here. I think you could trickle in here if you're interested. The time to buy it was a couple months ago when I was tweeting about it pretty regularly. I didn't get in at the appropriate time either. I was a little bit early. Like I said, though, sometimes I'm okay with being a little early if it means I'm in. And, I might have missed out on the big run. Might not have gotten at the exact bottom because I think you're able to buy in below $50, believe it or not too long ago. Am I showing it? Hold on. Yeah, it took a huge dive. So I've almost had it in about a year. And I was buying starting in this low 60s. I saw this large drop off. It made no sense, right? It's a great business. It wasn't worth $90, but it was worth 60. And so when I got the opportunity, and then what ends up happening, I blow my load and I don't have any more cash. So I bought some in the 50s, and then that's when I figured I ran out of money. So I'll just be honest with you. I'm always early. And I wasn't able to pick up below 50. But some people were able to pick up below 50, and I was banging the door. I was like, if you have any money, buy it, buy it, buy it. And I thought I was going to get caught with my hand in the cookie jar, as TJ always says. Here in February, I thought it was going to trickle down, but I was actually kind of happy because I was like, another opportunity for people to get a little bit more. I didn't buy it. I'm a dummy. I forget what I bought instead. But it ended up going back up to $80, believe it or not. And for me, man, it's going to be those ones. It's golden goose, just covered calls. Live on the covered calls. That'll be fun. Oh, Jesus. I thought I just shared my portfolio. Thank God. I just got scared. I thought I had to delete the stream. Okay, we're good. What price are you guys looking for cutting the HIMS position? What's the thinking behind the trade? GLP-1 play bet on management, trend towards telemedicine. That's a Chris Patel question, man. He's all about the HIMS. I'm just going to say that I was wrong. Put my hand up and say I was wrong on HIMS, and I did a video on it last year and got it completely wrong. And so, congrats to everybody. I just thought they were spending way too much on marketing. I will say though, I haven't had the opportunity to look through the financials. I know the financials aren't always the company and the stock price, but I'd still be curious if the financials would worry me. The reason why they worried me last year was because they were spending way too much on marketing. And I'd been involved in a company before that was very much on spending every dollar that they could on marketing. And once they got rid of that marketing, it wasn't the cool thing anymore. And everyone stopped buying it and the stock went to the shitter. So let's just see. I appreciate this, Junebug. I'm just, I invest very differently than Mr. Patel. So, and we were actually going to talk about that a good bit because we had a good chat on the phone earlier. So, what are you talking about in this bear market? Tell is over and why waste a dime? Okay. I honestly don't know why we haven't blocked this guy yet. I'd never have fun looking at what he says. Thanks, Mike K. Much appreciated. Amit likes exciting stock moves like Strike. Yeah, Amit knows what he's talking about. He's very knowledgeable, man. Not saying it's not, but maybe I'm just a little butthurt because nobody ever gives Google the credit they deserve, and I love Google. So, yeah, YouTube's doing great. They said a good quote. Sundar said, I think they said behind Disney, they're the largest streamer in the world, if you consider it streaming, right? So ahead of Netflix, ahead of everybody else. But Disney also can claim Hulu and stuff like that. So, very good. Microsoft's a dividend growth machine. I think NVIDIA will become similar in time. I did think it was interesting. Elon gave credit to NVIDIA and the founder and CEO of NVIDIA, and he basically said, like, you guys are playing your game. I get it, right? And, for what he means by that is just like, you guys have the only game in town right now. And he was talking about the project that he has at Tesla for creating their own GPUs, and I forget what he was calling them, but and I feel bad because my brain's just not 100% because of my cold. But he was talking specifically about they have to get in the market because it just doesn't make sense how they're able to sell for such a high margin, and so he's literally leaving an open space for another player to come in, and even if it's a fraction of quality, and they can charge a fraction of the margin, they're still going to get a lot of business just because they're able to sell it for such a high markup right now because they're the only game in town. And so if you're just the next guy that can get anywhere close to his output and you sell it for even a slightly better margin, you're going to win a lot of market share very quickly. And so the Dojo project over at Tesla. So he's talking about how eventually they're going to get back into that for Dojo. And I think that's very bullish, to be honest. Yeah, George Washington is an African American, exactly. Hey, thanks for the sub, Mitch. Appreciate it. If you have any thoughts, have any thoughts about sharing with friends or family, please don't hesitate to do so. Thoughts on Enphase and Tesla earnings? I didn't even honestly look at Enphase. I wasn't surprised by Tesla earnings. I thought they were okay. I'll have to look at Enphase, but I've never been a fan of Enphase. For the folks that are in it, I wish you all the best. I just, haven't seen a reason to be in it at this point in time. I just don't see at the moment that battery capacitors and inverters are sufficient enough yet for me to personally invest in them. I've been looking at it a lot with the recent power outages here, and it doesn't make sense. I don't have a lot of, I just live in a townhouse, right? I don't have a lot of land. This is eventually going to be a rental property, and the next house I have will hopefully have a little bit more land, and I can distribute more of like solar panels out into the lawn and stuff like that when I have a power outage. But for now, I would just have to rely on like a battery storage unit, and the battery storage just isn't sufficiently large enough to power a whole house for an extended period of time unless you spend on the order of like $20,000 or $30,000. And I just don't know if that's what's up for me. Mr. Patel, I think you missed it. I said it right after you got off the horn. It was about 45%, I believe, year to date, compared to the 17 or so percent for the S&P. So pretty good. You guys rock. Enjoy the content. Thank you, my friend. Yeah, Chris and I are yin and yang in some respects, so it's nice to be able to do that. Disney has potential to strike to deal with. A potential strike to deal with, or they have a deal to strike. Oh, they're back down to 90. Glad I sold. I had some historical shares in Disney, and I bought them back in, I want to say 2015 or 2016. And I rode them all the way up to $200 after the pandemic, 2020, 2021 timeframe. Never sold a share, and eventually got out at like 110, 115. I want to say it was within the past year. Yeah, probably 6 months ago, maybe, when it rode up. I sold it a little early. It got to 120 something, but at that point, I was just like, it's time. It is time. CSIQ. I don't know what that one is. That's not Cisco. Cisco CSU. Canadian Solar. One that really got away from me. I don't know much about Canadian Solar. This one is one that really got away from me, and I'm pretty upset about it. So I had bought First Solar. It was actually one of the first few stocks that I had bought, and I knew it was a good quality play. They just got done their S4. They were transitioning to their S5. And then they were like, oh, maybe we'll skip S6 and go directly to S7. You know, at the time, China was eating their lunch. And they got profitable. But for some reason, even though they were profitable, they just weren't getting the love. Well, turns out, you know, I sold it for like 70 or 80 bucks a share. So I didn't like lose money. But they got the love after the pandemic. And it's kind of sad because, like, you know, your boy was holding on to them for quite some time. And unfortunately, I just never got the returns from it. But that's just the way the world cookie crumbles, I guess, sometimes. So I forgot what I bought with it. It's in my Roth, so I'm sure I could trace it. But YouTube and every video is greater than any streaming service. Yeah. Would you mind commenting on Woodside and possible play there? I mean, it's tough to say, right? I honestly think that they're buying out Toreon as a whole company. And what then you would be doing is you'd be buying into Woodside. And so your shares are either going to get moved into Woodside shares. And that's okay. Woodside's growing really quick. And I can't talk too much about it. You know, my opinions of Woodside, I've dealt with them in the past. You know, no hate or anything. It's just I try to remove myself from company business when I can. So yeah, I mean, just do your due diligence. Woodside, what I can say, which is public. A lot of things I can say is public. I just try to distance myself based off of, you know, personal research versus company research, etc. They bought out a lot of BHP assets, you know, a couple years back, and they're growing pretty quickly. I think the only fear that I have for them is maybe high debt, but they're doing a good job. They're heavily LNG focused. They got some projects going on along the world. And so if they're able to kind of maintain that and there's no big commodities, I think Woodside's a pretty decent one. How quickly it grows, though, it's tough to say, you know. But I think that they're up there. They're trying to get to be one of the larger independent oil and gas companies out there. So if you think they're eventually going to meet that comparatively to, say, the Occidentals of the world or, you know, any other sort of oil and gas company out there, then could be a good opportunity and it pays a decent dividend. But, you know, that's up to you. I personally like to buy oil and gas companies when the commodities market is not doing so good, right? And we're kind of in this lull in between where let's just look at WDS, which is Woodside. They've been able to retrace upward since the pandemic, and they pay a decent yield. So they're paying about 7% yield on the current $18 share price. They're $50-something billion, $34 billion company. It's about half the size of Occidental. Price to earnings at the moment is 20. So that seems like it's a little low. Probably some write-offs or something like that, because I think they actually make some pretty decent EBITDA. But if you think about it, you know, what are you exactly trying to get out of that? You can see during a pandemic time frame, it was trading at half the price it is now. Is right now the right time, right, to potentially buy into it. So I guess it's really just up to you and your thoughts, right? What's your game, you know? I'm not saying it's a bad opportunity, especially if you're looking for a dividend yield. You know, 7%. Who's to fault that? And I think, but you have to think a lot of these LNG projects is going to be a lot of capital up front. And you know, the cash flow won't come until way down the road. The big benefit for that, and once again, I'll probably shoot myself in the foot by saying this, is what can you sell the LNG for? So it's more like you're not buying it to get into the LNG plant itself. You're buying it for selling the LNG to somebody else. Being able to buy the feed for, say, $2 to $3 an MCF and sell it to Japan or sell it to Europe or sell it to whomever for $10 an MCF. That's the real goal there. And you're just getting involved in the LNG train to secure that opportunity. So anyway, I'll stop talking about Woodside before somebody. Hot Chris was here. Unfortunately, connection wasn't looking too good. You guys go deep yet never shallow. Your BPY-PM is a great call, up nearly 6% with a 10% yield. Did Chris ever take a position in HSY? That's a good one, man. And I talked to Chris in the past about HSY, and we talked about it in the Patreon. I'm not a hater against it. I just need to do a little bit more due diligence about are they still heavily involved with the Hershey Trust? That was something that they had a lot of ownership in the shares, and it was kind of a corrupt organization. So I personally, do your own due diligence, but I was always kind of curious about that piece. But I don't think Hershey's going anywhere. So I'd be curious to see how it looks. I owned it in, it was like this time frame, 120. Sorry, the 90 to 120 range. And I think I might have sold it in 2019. I'll have to go back and look, but I never made too much money off of it. Once again, sorry for my congestion. Solar needs batteries, and Tesla has the best homemade batteries. Do you think we're witnessing an AI bubble being formed? I think it's too early to tell. Just listen to the Google call. He's saying in a year's time, 2 years' time, Gemini is going to be completely different from what it is today. So everyone, even Copilot is becoming a regular thing in our business. I'm sure maybe in some of your guys' business it is as well. So I wouldn't be surprised you start seeing Geminis do something very similar. So I think it's still too early to know how big or overblown it is. Do you trade differently in your Roth versus my brokerage? I would say I used to take it a lot more serious about what was in my brokerage versus what was in my Roth. Now, I would say I try to do more moonshots in my Roth. Like I have a lot more Rocket Lab. I've actually thought about one of my steady eddies that I had in my Roth for a long time was actually BHP. I bought this bad boy back in 2015. Let me go back. When this perfect storm happened, oil was in bad shape, metals were in bad shape, etc. I had bought a lot in this 15 to 25 range. My biggest problem was I had bought 250 shares, which was a lot for me back then. You think it's like $4 or $5 grand. But I was like 23. So that was a lot of money back then. But as soon as, because I was buying it like on this way down because it was dropping from the 50, 60 range. And I was like, can't believe it. Like this BHP, like everybody knows BHP. And it was dropping into like the $19 range, etc. And once it broke even in like 24, 25 bucks, I had sold that other 100 shares. So I just had the 100 and whatever shares that I had remaining. And that was one of the bigger mistakes because this position for me overall is up 300 some percent. And sometimes when it gets into the 60s, like during these spikes, it goes back up to like 400%. But at the same time, it goes back to, well, why am I holding the stock, right? I bought it at a perfect time. I was able to write it up. I've been able to ride and get those dividends over the past 10 years. It's trading at a 5%, 6% dividend yield. But do I really expect it to go to $100 a share? They're not buying back stock. So, what am I doing with it? It kind of, has it run its course? And you need to ask yourself those questions. Sometimes you're like, well, it's at $350 a share or 350%, more a share than what I bought it for. But it's like, okay, well, and I've been thinking about this as well with like Rocket Lab and some of these other companies. Is like, once they get to a certain size, it's like, you're done. Like, unless you want to, you might say the same for like Apple or Microsoft. And unfortunately, I've been humbled by that too much over the past 10 years. But you think about it, it's the same reason why I sold Pepsi. Last year, and a lot of people gave me a lot of crap for selling Pepsi in the 190s last year. And I was like, I get it. Pepsi's great. I was like, I was paying a 2.5% dividend yield. Now it's up to 3% because it's pulled back a little bit. But I was like, do I expect Pepsi to double in the next 10 years? Not really. I don't really see it going to $300 a share, $350 a share. I don't see it. And so, I was like, it just didn't make sense. And so I was like, if anything, it was running hot. I had the opportunity to sell it, and I forget what I put the money into, but maybe it was Rocket Lab. I don't know. But that's the thought process. Once you get high up enough, I'm like, do I really see Pepsi as a $300 billion, $400 billion company? And I just didn't see that. That's not to say it's a bad thing, right? It's just, I'm playing this game now where if you asked me 5-10 years ago, I was trying to get to the place where I was like just at $1 million, right? And now that I passed that, you kind of get a little bit of relief, and you kind of understand how money works a little bit. It's like you could play scared money, like buying Pepsi, when you're 25 years old because it's got a decent dividend, and it's not going anywhere. That's investing in scared money. That's scared money, right? Versus buying Rocket Lab, it's like that's a risky bet, but it's a calculated risky bet. Like that's the real deal to me. That's just how I've matured. And, investing in a company like Pepsi used to be my bread and butter. Johnson & Johnson being another one. I think I sold Johnson & Johnson to like 175, 180 or something. And it's been on a steady downtrend since. I'm not saying I'm an oracle or anything. I was just sitting there being like, I got what I got out of Pepsi or Johnson & Johnson. I think I bought it at, I'm going to get the numbers wrong between Johnson & Johnson and Pepsi because I bought them at about the same price. But I want to say I bought Johnson & Johnson like the low 100s. Let's go back. So I think I started buying it in the low 100s or so. And once I had that opportunity, I wrote it up to 175, 180 bucks, and I unloaded it. I mean, I'm just at the same place where I'm like, it's overvalued. Do I see it going to a $700 billion company in the next 10 years? I do not. What are they doing? What are they innovating to be able to get there? And so, if dude, trust me, in a pandemic, if it dropped back down to 80 bucks, I'd buy it, right? Like, I'm not going to be dumb because I know they're still, making all the same sort of things that they were, right? So it wouldn't make sense. But, you kind of have to know how the market works a little bit in order for you to make a little bit of money sometimes. Like, what's another word? Like Altria Group, right? Like Altria Group's another good one. It's not going to double overnight unless you see some sort of catalyst, right? Whether that's the MJ market kind of being unleashed on its head, or some lessening of regulation or something like that. Like you're in a revenue flat society because you're growing the product cost because you're losing clients every year because smoking is becoming 1 to 2% less popular every single year. So you're selling 1 to 2% less of the product. So you raise the price, you buy back stock, etc. But at some point, people recognize like it's unfortunately a declining business. You're only getting 10x price to earnings. You get a fat dividend yield. You can take that dividend yield and go buy whatever you want, right? And that's another avenue as well. You buy in these low little like these little troughs at $40. You wait till it goes back to 45. You sell. It's just every quarter there's an in and out. There's a little wave. You can play that game. If that's your game, it just depends on how you want to show up in the market. Everybody trades extremely differently depending on what you're looking for and how you're trying to navigate it. Let's see. Sorry, get a little cloudy in the head because of this cold. Thanks. Market didn't like the news. They did approximate 10% pullback. I'm assuming you're still talking about Hershey. What do you think about the dip in Meta? Sorry, I didn't mean to skip you. Is Chris back into Meta? I know Chris had some. I don't follow it as much. I'll just be honest with you. No hate. How about Enphase? I'm not a fan of Enphase. Doesn't mean it's a bad stock. I just don't follow it. Just it is what it is. Bechtel's going to be contracted to finish the trades, and Woodside's going to go belly up, selling out to Bechtel. Just kidding. Hey, man, you need one without the other. Bechtel, they're a great contracting company. They know what they're doing. TFC is up to $44. So high. Sorry. The high of recent memory. Is it time to start thinking about taking profit? I don't know. I haven't really been involved in that. That's not my game. I would just look at, what do the financials say? I'm assuming the financials either came out recently, yesterday it looks like. So 91 cents a share. What's wrong with that? For $44. So let's just say it makes that 91 year round. So you're talking 44 divided by 3.6. I mean, $12. 12 times earnings for a bank isn't dirt cheap, but it's not expensive. So I guess it just depends on what you want for the company. Honestly, I don't know where they're headed. I don't know what kind of shape their loan book is in. That's a Chris Patel sort of question. What's up? What's going on, my guy? So back after at 50% up on TFC shares. Really depends, man. You have to think, do you think TFC is going to double from here, or go up another 20%, 30%? Like when you buy into something, you need to know about what time you're getting out. Otherwise, you end up like me and BHP. I bought at the right time. Have I been just sitting on my hands? I could have had that money in something else. It's the same thing here, right? Do you have another opportunity you'd rather that you think is going to double or triple and you can use that money? I don't know about you, but I don't know. Maybe Truist is that guy. Maybe they can get back to $63. But that's a 50% return from here. Do you think it's going to grow up 50% again? I don't know. I'm just posing the idea, right? I don't have the answer. I don't look at TFC, but I'm helping hopefully get you in the right direction to help you make a decision. It's not my decision to make. Excuse me. Struck up a gem at Zeta Global using AI in terms of how to market better to customers. Yeah, I probably won't take a look. I probably will not. ABCL, man. It is what it is. Steven likes dividends, sometimes to a fault, but we're all investing for different things. Steven likes cash flow. I'm trying to get to 10 million. Once you get to 10 million, maybe I'll be all about dividends again. I don't know. So I'm like, at that point, I'm like, all right, I got to 10 million. Do I really want to go to 100? Probably not. And so I'd probably be like, let me just get a fat lifestyle so I can, I don't know, 10 million at a 4% yield. What is that? I'm not good with math. You guys know that. 400 grand a year. At 400 grand a year, I'd probably spend about $150 on a house a year. So that's a $12,500 mortgage. Yeah, I'd probably start concentrating on dividends again. I don't know. It really depends, right? Like, how do you want to play the game? Like, life is a game, right? And once you get to 10, and it's going to come faster than I think. I'm probably closer than you guys think, too. You only need to double your money so many times, Amazon is zero, man. I don't think it really looks vulnerable. I think a lot of people are, because it was at 200 and people are like chomping at the bit. I don't know. I would love to take your capital, my friend. I would, but unfortunately, I don't have my Series 65 yet. For those of you guys that are actually interested, I hope to eventually. I've actually come up with a company name and everything. I will eventually become a registered investment advisor, and there's going to be a very serious piece of it of literally me. It's basically give out my business plan here. But it's really just about getting people to invest as much as they can in the S&P 500 majority of the time. And if you really want to invest in the special products, it'll cost a little bit more, but we could talk about that. But really, the biggest step is making the right money moves, right? Like, you expect all these companies to be reinvesting themselves and not wasting money on stupid shit, right? But then here we are wasting our money on stupid shit and expecting our company, ourselves, to like lifestyle or like net worth to expand. So it's pretty funny. Like, if what's a good way? If Elon was buying Costco hot dogs for 80 million people a day, you'd be like, Elon, why the fuck are you buying, that's $80 million a day in Costco hot dogs? Like, why are you doing that? It doesn't make any sense. And he's like, I don't know, I like Costco hot dogs. Like, I do too, my guy, but 80 million? Like, what the fuck? Like, it's a bad analogy. Hopefully you guys are laughing, but seriously, it's like, we expect these companies to be like, what the fuck are they doing? But at the same time, we don't hold ourselves accountable. And that you have to reinvest in yourself, right? If you're not investing 10 to 20%, like, you're not going to get anywhere. You're just going to be stagnant. And that's okay. And you recognize that that's okay. Like, if that's your decision and you are okay with that decision, but I think everyone is so ignorant and, uneducated at the topic that they just assume you can put $1,000 in and get to $1 million. It's like very rare and few and far between. You have to invest 1,000, then invest your next 500, then invest you didn't spend as much, and you found $200 magically at the end of your checking account, and you get paid tomorrow, and that's just enough for your mortgage. You're like, I just found $200 in my checking. Bam, let me invest that into the market. I can't tell you. I was literally, and I still do to an extent. I've had, now money is coming and going in so many different ways. It's hard for me to do it anymore. But when I was strictly just investing in my individual brokerage account, my 401k, I had it down to $100, like, plus or minus every month in my checking account. I was like, I always want to be at $400 at the end of the month in my checking account. And for a good 4 or 5 years, it was perfect. Perfect. Every time I got a raise, I would immediately bump up. I knew exactly what to do. And $400 at the end of the month. And like, I was living paycheck to paycheck, but I was investing everything. And like, now I can take my foot off the gas and I'd be okay. But I think a lot of times people don't do that. And there's a balance, right? You got to have fun. You got to have your good times, but there's an opportunity cost with everything. And I think a lot of times people take that to the extreme and end up overspending on stupid shit. On 10 million, you can make a lot more than 4% selling cover calls now. Depends, my guy. Depends. You could. But are you one of those guys that's like, you can make 52% a year making cover calls? Fucking hate those guys. I think Michael Anthony has a problem in his head. I don't like him. Do you like Kinder Morgan? Seems to be in your wheelhouse. Kinder Morgan's not bad, man. That's definitely a Chris Patel special. Have you seen the Amazon business? Not sure this product will go against PayPal with Braintree. I'm not following that statement. I'm also not right in the head, guys. My head is really foggy. It's not that bad. It's just I can't think as quick as I normally do. And I'm just not smart in general, so you guys know that. So during your hour plus of open line, still feeling like 15 share at the end of... I do think so. The things that will hurt against this $15 a share is, firstly, if for some reason Neutron has to... the Archimedes engine has to go back to the shop and doesn't hot fire test before the Q2 earnings. I'd be surprised, because we basically have been sitting in radio silence for the last week or so, and they were very close to doing a hot fire test. So if we get to the end of July and we actually get to 2Q earnings, there's no hot fire tests, That'd be very interesting. But I would also expect that if there was no hot fire test and there was a problem, that Peter Beck and the team would let us know. So there's that piece. But multiple things need to happen for $15 a share. You need to get Neutron into the air. You need a little bit more clarity on the the constellation that Rocket Lab also wants to do, so you can get some ideas to how much revenue and stuff is going to be coming through the company. And yeah, you just need to get Neutron out. So yeah, I think 15 a share. But you know, I was having this conversation with Cole. He was up in the chat, a good buddy of mine who actually introduced me to Vector Acquisition Group back then. Eventually came into Rocket Lab. And we were chatting. It's like, you know, my lowest that I see Rocket Lab going to is $12 to $15 billion organization. And so that means Rocket Lab's probably what, 2.5 billion right now? Let's see. I always get it screwed up. Yeah, 2.6. So let's say it's 12 divided by 2.6. So it's a 4.5x from here. So, you know, I view it at a minimum, you know, unless the company goes, if the company succeeds, right, I see a 4.5 minimum X. Obviously, there's cases where it fails. I view that, you know, as a 5% likelihood. I'm still not out of that space as of yet, but it's down to 5%, and I'd rather say it's closer to a couple percent just based off my trust in Peter. But you know, I sometimes am an optimist, so I throw a couple percent on top of that. Where I really think at the moment, where I see based off of what I know, right? I don't have any additional knowledge than you guys do, but what I've been kind of gathering and knowing, I think it gets to 25 billion, which is about a 10x from here. Can I see it get to 50? I think there's a possibility, but with what I know, I still haven't seen the path yet, right? And so I need some things to happen for, like, I need to see Haste do well. I need to see Neutron get some decent contracts and the constellation start to come together, like the Rocket Lab constellation they would have put together. And then I could say, all right, this thing's going to 50 billion. And at that point, you're about a 20x. I also think that they're going to be making a lot of money. And with that, they're either going to be paying dividends or buybacks at some point. I don't expect that today. Obviously, they're not EBITDA positive, but I would expect in 10 years' time, there's some sort of at least buyback program to eliminate share-based compensation and avoid dilution. I would expect at least at a minimum. And these guys don't dilute that much, so it wouldn't be too difficult for them. So there's that. But anyway, that's, I know you asked for next year, but yeah, I'd say 15 after, you know, you have EBITDA positive, you have Neutron up in the air, and yeah, sorry, my voice is getting scratchy. Thoughts on Enterprise? I think it's a good one, but the best person to ask would be Steven Fiorillo. Heavy and Mag 4, Amazon, Microsoft, Meta, Google wants to follow the market and roll it into small caps. That's a personal bet, my guy. You know, I think it really just depends what you're looking for. You know, I haven't seen a reason for me to sell Google here and rush into small caps. I have Amazon. I don't see a reason either for me to be rushing to sell Amazon. If anything, Google at least has given me a reason to continue to hold at this current valuation. When does Amazon report? Probably this week. They're generally in the same week as Google. August 1st. Okay, so we have about a week's time between now and then. So there's, I'm curious to see what Amazon pulls out of the hat. what I don't know, because I haven't done as much due diligence on Microsoft or Meta, so I can't speak on behalf of that for you. So yeah, I guess it really depends, man. If I were to choose, I would personally, right? Not saying for you. This is, you got to think for yourself. But I personally have been very well suited by investing in the SPY and just leaving the money there if I don't know what to do with it, and pick and choosing, right? So like if I really want a small cap company, I find one that I want, and that one's Rocket Lab. Like if I want to find a medium cap, and I think I have a lot of conviction in something, I'll buy a Palantir, right? And so to me, if I'm choosing an index, there's two indices that I probably follow. One's the SPY, one's the NASDAQ 100. I have a gamble as well and a triple leverage NASDAQ 100. I bought TQQQ many times over. I have a decent chunk in TQQQ for those of you guys that follow. And it's volatile. Yeah, trust me. For 10, 14 bucks back in 2020, all the way up to 80, back all the way down to 17 bucks, back up to 80. Now we're back down to 70 or so bucks. So bad boy is volatile, but in 20 years time, very comfortable feeling that there's going to be something that I don't foresee that will drag the NASDAQ 100 way higher than it is today. I'm not a wizard. I could try my best, but I think I have with, say, Rocket Lab and Palantir and some of these other opportunities. But sometimes you don't get them all, like Tesla. I didn't get Tesla. I still think it's overpriced. So you're not right all the time. Everything about so what I will say is I have told my family if I die to put the money into this XYLG. Not all of it. I forget what the percentages are, but it's like 75% or so into XYLG, 20% or so, 75% or so into SPY or VOO, whatever, 20% into XYLG. And this is strictly for attaining the yield. I don't think it shows up appropriately, but the yield on this thing, it shows up as 1%. But in my experience, it's about 4.5 to 5%. So that yield, kind of comes through. So you have the 1.5% coming through from the SPY. You have a little bit of an increase in the yield coming from the XYLG of the world. And you also have a little bit of growth as well associated with this. So hopefully you don't lose out on all the growth. Like here, you can see the past year is up 1050 with a 4 to 5% yield versus, say, the SPY. Over the past year, it's up 21, so it's about half that. It's just slightly different, right? So I'm doing it because I'm going to tell my sisters never sell any of the principal, only spend what comes in as income in the dividends. And so there's that piece. And then also I told them to put 5% into TQQQ and only take away from TQQQ if and only if it gets greater than 25% of the total portfolio. So, for example, if I had them put in everything and TQQQ is 5%, and it grows to $10 million, and TQQQ was $2.5 million, to slowly siphon off TQQQ into the other funds, so that way they can get more income over time. And the hope would be that if it drops to, say, 3%, TQQQ drops to 3%, then you could take some of the others, put it into this, because it's obviously a good time likely to buy it because it's pulled back massively because it's very volatile, and then you can ride it back up. And also to balance as they see fit the S&P 500, the XYLG portion for their dividend needs, but hopefully they don't get too greedy. And the hope would be that they never touch the principal. It would only be to help grow their income. Yeah, man, I don't have any kids, and I also recognize I've seen what people do when, unfortunately, people die. I've seen a lot of people just squander their money. And, I just realized, like, people that you thought were good with money aren't good with money. And so if I don't direct them, they're not going to be good with money. I'm not saying my sisters, by the way. They're actually probably better than most. But, I've seen people that I, love dear to my heart. And I'm like, this person is not good with money. And they also don't like to hear from other people how to manage it. So, fortunately, if it's written down and given to a financial advisor, that person would, hopefully listen to the financial advisor. But you never know. But SPLG, I'm assuming it's an S&P 500. Oh, cap weighted? Nah, I'm not. I don't know. I don't mess with that. Yeah, people that are often terrible, they're like, money's not important. It's like, I hear you, but it kind of is. But anyway, I'm getting stuffy, and you guys are probably tired of hearing from me. Hopefully next time we can have a good conversation with Mr. Patel, and hopefully this gives you guys a little bit of an itch to scratch. But otherwise, I'm going to call it. I'm probably going to get to bed here early, and get ready for a great morning tomorrow. Don't do anything I wouldn't do. I'm going to probably watch one or two things on the internets, but after that, calling it a night. So thank you guys for checking in, and I'll talk to you guys hopefully on Thursday with Mr. Patel, but we will see. Cool. Talk to you guys then. Cheers.